Fundamental bottleneck for artificial intelligence is no longer the scarcity of advanced chips or high-performance models, but a much older constraint, the physical availability of electrical power. In Virginia, the world's most concentrated data center market, interconnection wait times for new facilities have ballooned to 7 years, according to data from Blackstone and utility filings. This power crisis is forcing a radical shift in how digital infrastructure is built, moving away from total grid dependence toward a model of energy fulfillment where companies are effectively becoming their own utilities. That's why we're looking at United Energy Corporation and their strategic pivot to bridge this infrastructure gap using small-scale LNG and distributed power.
The scale of the problem is difficult to overstate. Recent forecasts from the Lawrence Berkeley National Laboratory suggest that data centers could consume as much as 12% of all U.S. electricity by 2028. We're talking about a move from roughly 176 terawatt-hours in 2023 to potentially 580 terawatt-hours in just a few years. United Energy Corporation, or UNRG, has identified that the traditional utility model simply cannot keep pace with this trajectory. Their whole energy fulfillment platform is built on the reality that a data center developer cannot wait the 5 to 10 years it takes to permit and build a new high-voltage transmission line.
You mentioned the 5 to 10 year wait, and it's interesting because construction on the data center buildings themselves often only takes 18 to 24 months. This creates a massive mismatch where you have finished billion-dollar facilities sitting idle because they can't get a connection. United Energy calls this being queue-limited. Their solution involves deploying infrastructure that operates entirely behind the meter. But how do you actually replace a hundreds of megawatts grid connection with something on site without just filling the parking lot with diesel generators?
That's where their integration of small-scale LNG becomes the differentiator. Historically, if you wanted on-site power, you were looking at either a pipeline connection, which has its own multi-year permitting delays, or diesel, which is expensive and difficult to permit for prime power due to emissions. United Energy's acquisition of Alkane Modus Vis and its assets in April 2026 brought them a 100,000-gallon per day LNG production facility in Seminole, Texas. By controlling the fuel source, the cryogenic logistics, and the power generation assets, UNRG can offer what they call Be the Grid. It's a closed-loop system where they truck in liquefied natural gas, regasify it on-site, and run high-efficiency modular generators.
The Be the Grid concept sounds like a total rejection of the utility-customer relationship. If I'm an operator, I'm usually paying for the convenience of the grid. Moving to a distributed model means I'm now managing a fuel supply chain and a power plant. Is that really a viable trade-off for most firms, or is it a desperate measure for those who have no other choice?
It's becoming a strategic necessity. If you look at the economics, it's not just about speed to market, though that's the primary driver. United Energy's model provides single-point accountability. In a traditional setup, if the power goes out, the data center operator is dealing with the utility, the fuel provider for their backup, and the generator service company. UNRG's energy fulfillment platform integrates all of that. They own the transport fleet and the generation assets. This allows them to scale power in phases. If an AI cluster needs an extra 20 megawatts for a specific training cycle, they can deploy additional modular units in weeks rather than the years it would take to upgrade a substation.
We should talk about the environmental side because there's a lot of pressure on these tech giants to be carbon neutral. Natural gas is cleaner than diesel, but it's still a fossil fuel. How does UNRG's strategy square with the net zero pledges we see from companies like Microsoft or Google, who are increasingly looking at nuclear or geothermal?
It's about the pragmatic bridge. While everyone is excited about small modular reactors or fusion, those are decade-away technologies. Today, natural gas through UNRG's system offers a 30 to 40% reduction in CO2 emissions compared to the diesel backup systems that most facilities are currently forced to run during grid stress events. Furthermore, by using small-scale LNG, you're often utilizing gas that would otherwise be stranded or even flared in basins like the Permian. United Energy is essentially taking that wasted energy and turning it into compute fuel. It's an infrastructure bridge that allows these companies to grow now while waiting for the broader grid to decarbonize.
I noticed UNRG is expanding that Seminole facility by another 150,000 gallons per day. That brings their total capacity to 250,000 gallons. That seems like a big bet on this specific delivery model. Is the demand really that concentrated in areas without pipelines?
It is, particularly for edge computing and AI training. AI training clusters are power dense. They need massive amounts of electricity in very specific spots. Often the best land for a data center, low tax rates, cold climate, or proximity to fiber, isn't where the grid is strongest. United Energy's virtual pipeline bypasses that. They don't need a pipe in the ground. They use their own cryogenic trailers to move the energy. This mobility is why they're seeing growth not just in data centers, but in aerospace and oil field electrification too. They are operating in 7 states already, including Nevada and North Dakota, where the geography is vast and the grid is often sparse.
Let's push back on the logistics for a second. Trucking fuel into a mission-critical facility sounds risky. If there's a snowstorm or a road closure, does the data center just go dark? How does United Energy ensure the 5 nines reliability that these operators demand?
Reliability in this model comes from on-site storage and integrated logistics. Unlike a pipeline, which can suffer from regional curtailments during extreme weather, we saw this during Winter Storm Uri in Texas, on-site LNG storage provides a physical buffer. United Energy manages the entire supply chain, so they aren't relying on third-party shippers. They use dedicated corridors and 24/7 dispatch. Because they own the full infrastructure chain from fuel to delivered power, they can guarantee operational continuity. They've already delivered over 120 million gallons of LNG and 750 million kilowatt hours of distributed energy. That track record is what's winning over the industrial and data infrastructure markets.
If I'm a utility provider, I'm watching this with some concern. If the biggest, most profitable customers like data centers start leaving the grid and using companies like United Energy, does that leave residential ratepayers on the hook for the costs of maintaining the legacy system? We've seen reports of wholesale electricity rates increasing by over 200% in some data center hubs over the last 5 years.
That's a very real tension. When a hyperscaler adds a massive load to a local grid, the utility often has to fast-track upgrades, and those costs are frequently spread across the entire ratepayer base. By moving behind the meter with a UNRG solution, a data center actually reduces the burden on the public grid. They aren't competing with the local neighborhood for the same transformer capacity. In that sense, United Energy is providing a release valve for the grid. It allows the tech sector to expand without triggering the massive rate hikes associated with emergency utility infrastructure buildouts.
The business model here also seems to be shifting from being a commodity producer to an infrastructure provider. United Energy mentions their energy fulfillment model isn't just a product, it's how they operate. From a financial perspective, what does that look like? Are they just selling gas, or is it a long-term service contract?
It's about recurring revenue through integrated delivery. They aren't just selling a gallon of LNG, they are selling the outcome of reliable power. Their 2026 revenue projections are between $15 and $20 million with EBITDA margins near 30%. That's significantly higher than a traditional oil and gas producer because they're capturing the value at every step, the production, the transport, the regasification, and the generation. They're positioning themselves as a midstream plus power platform. For the customer, it's one bill and one team to hold accountable, which is worth a premium in an industry where downtime costs thousands of dollars per second.
We focused a lot on the massive hyperscale campuses, but what about the smaller edge data centers? These are the ones needed for things like autonomous vehicles or real-time AI processing in cities. Does the UNRG model scale down, or is it only for the big players?
It's actually ideal for the edge. One of the biggest hurdles for edge computing is finding power in secondary markets that don't have a major utility backbone. United Energy's modular approach means they can deploy containerized systems that fit the footprint of a smaller facility. Because the equipment is pre-tested and ready to operate within weeks, it allows for a decentralized deployment strategy. You can put a high-performance compute node almost anywhere you can park a truck and a generator. That level of geographic freedom is something the traditional grid can never offer.
It seems the ultimate takeaway here is that we've entered an era where energy is no longer a utility you just plug into. It's a strategic asset you have to secure. United Energy Corporation isn't just selling a solution to a power problem. They're redefining the data center as an island of energy self-sufficiency.
Exactly. The data center of the future looks more like a self-contained power plant that happens to do a lot of computing. As long as the gap between digital demand and grid capacity continues to widen, the energy fulfillment model will be the primary way these facilities stay online. By integrating fuel supply, logistics, and generation into one accountable platform, UNRG is providing the certainty that the AI economy requires to keep scaling.
The power crisis facing our digital infrastructure is a complex challenge, but the shift toward distributed, modular solutions is providing a clear path forward. If you found this look at the energy fulfillment model insightful, share this episode with someone who's following the future of AI and infrastructure.